Good day, everybody. It's Greg Schnell, and I am here with the weekly market review. Lots going on. Housing had a huge pop today, so I thought I'd cover off some of the lumber-related stocks, things like that. We've got some other things percolating as well. Options expiration day. So let's jump in. Lots to cover off. To find my blogs, I'm just going to scroll these out here. Don't forget to go to gregschnell.com. You can find more information there. My contact information, new update at gregschnell.com, Twitter, and on the website gregschnell.com. Okay, so the agenda today, indexes are hitting new highs and it just keeps going on. I thought they would start to waver last week and the week before. This week they got a resurgent push, so they're sitting up at new highs to close out the week again. Advanced decline lines improved. They were getting cautious. They're improving. Options expiration is today, so that's a big one. And then the lumber charts really look interesting, so it's just a different place to go look. I'm sure everybody else is looking right at the housing stocks themselves, but some interesting ways to play this, so I wanted to check it all out. So first of all, let's just update the chart here. And what we see is the equity markets surged up in the open and have just kind of jogged sideways. Nothing wrong with this. We're up another 6 points. So we've blown through that 3,300 number and kind of settling in around this 3,325 level. Intraday view, that is just a remarkable stretch. The NASDAQ 100 is up over almost 500 points in 3 weeks. So just a crazy advance. This is 28,350 to 29,400. So just short of the 30,000 level for the Dow Industrial. So perhaps that's where we're going to get to. As we can see, it's pretty much a moonshot off the October lows with one pullback there in early December, 2 days down, and then the rest of the days up again. Big trend line here in momentum hasn't broken yet. Looked like it was going to, and then just turned back up again. So everything is still bullish. PPO is the highest level on the Dow Jones Industrial it's been in a year and a half, and on the Nasdaq again. I've reiterated this multiple times, but it's really frothy, up around the 5-year level high here. So over 4%, 4.1% in here. We had the January 2018 kind of surge, but we haven't been up at this level, this PPO level, for a long time. So this is pretty heady stuff. And one of the reasons I'm a little bit cautious, so some of my scans that I like to look for, things starting to improve. A lot of the defensive names that pay dividends are starting to turn up. Anyway, can't take anything away. We've got Google also hitting the new $1 million mark. So lots of good things going on out there, and I'm trying to find opportunities is what I'm looking for. So here's the S&P 500, and what we've got is earnings Friday. So this is the big options expiration in the middle of the earnings period, or to start the earnings period. JP Morgan kicked it off on Tuesday. And you can see this market's moving steadily upward here. So very bullish. Same thing on the NASDAQ. We don't have any real reason to doubt the direction of that yet. Oh, one thing I wanted to cover off. Let's just go back and briefly look at the breadth, because it is not remarkable, but it's right up near the high. So here's the S&P 500 percentage of stocks above the 200-day moving average, and this was for Thursday's close. 87%. That's higher than anything all the way back to 2014. So, maybe we're starting a new bull market with the new China relationship, and we're going to be up here in this 2013 level. And then we've got months to go if that's the case. So this is a very heady level. The 82.8%, I think, also takes us back into 2014. So again, 5-year highs on all of these indicators. Markets don't usually spike up and then roll over and make a long-term downtrend. They usually lose investor enthusiasm over time. So the fact that we've made these heady levels doesn't suggest that we're just going to fail tomorrow. The New York Composite, we're up at 70%, which would be my top red line up in here. And we could see well up back to the 2016 levels here for the New York Composite. So still very strong. And for the NASDAQ 100, We're up at 85%. Again, that takes you all the way back to 2013. Really heady stuff. And on the NASDAQ percentage of stocks above the 200-day moving average, we're at 85%. We've been here for a little while already, and we saw that back in 2017, same sort of thing. And that was the start of a big upsurge. So maybe we're just getting started here, folks. So with all of that, I think, just continue to watch how everything's evolving. The one thing that I would say, I went through the banks on the Market Buzz Friday morning, so you can catch that over on StockCharts YouTube channel. And on that particular video, one of the things that was interesting was a lot of the U.S. banks, main banks, are rolling over. 3 of the Canadian banks are starting to surge up, Royal, TD, and BMO. So they look a little more interesting from a bank perspective. But asset managers and investment services were the 2 industry groups that were starting to turn up while the banks started to look like they were getting weaker. So anyway, I would encourage you to go look in that space. There's some interesting data points in there. I mentioned in my opening comments that the advanced decline lines are improving. And what we saw was at the beginning of the week, they looked like they were about to crack through this uptrend line off the October lows. Well, they've just turned and bounced off it subsequently. So things are definitely moving along, and the 2-week moving average here has surged up to a height that we saw to kind of kick things off. So it doesn't look like anything's ready to just relax here. These are pretty strong data points at this point. I feel like the market's extended. I know a lot of technicians do, but probably the bigger issue is it continues to grind higher. When I ran my scans, one of the things that starts showing up is things like dividend stocks, consumer staples. They aren't hitting new 52-week highs, but their momentum is changing from a downtrend to starting to turn up. Starting to see other signs of improvement in that area. And again, if you're looking for dividend plays, then you kind of need to get them when they're basing and starting to turn up so that you've got a higher percentage yield based on the price you're paying for the stock. So I like to go look in there. Anyway, there's a little bit of value to be found jumping into that space, and I can show you a few of those stocks on my scan. Let me just go grab that. So in this group here, so these are, I want to go get the view all mode and go into summary mode. And when we sort by, well, we can do it by sector as well. So when you sort by sector, healthcare, very big. Industrials, quite a few starting to turn up, mostly in trucking. But look at this utilities list starting to turn up. Consumer staples list starting to turn up. So I don't want to harp on it, but I think if you're looking for dividend-related names, these are starting to turn and might be something that might interest you. So I would encourage you to go check out some of those names. This Constellation Brands, obviously a popular one. It's got a little bit of marijuana in it for an uplift. But here's your conventional energy, conventional electricity, gas distribution, and multi-utilities. These ones look quite nice. So if you get the chance, go check those out. We're going to just quickly look through some of these energy names here. So this is Nexera Energy, and this chart's straight up and to the right, and it's starting to push higher. So no real major turn here. Let me just go back the other way. What I'd like to do is open the link over here so I don't have to keep changing. So this is one I wrote about on the Wealth 365 article for this week. But this stock is turning up at a nice location here after pulling back to the 40-week moving average, and looks like it wants to take off again. Pays a 2.4% yield, but pretty nice capital growth. It's been sideways for the last year, so it looks like it's just starting its next leg higher. Going in and looking in on Sempra Energy. This one's starting to, PPO was getting mellow here, and looks like it's going to start to fire up again. So that one's a nice chart to look at. Dividend yield's already at 2.4. This NiSource is another nice chart, but when you start to look through these, this Alliant Energy, this one, was kind of sideways for 6 months here, starting to surge. PPO momentum had pulled back a bit and is starting to turn back up. This stock has been one of the top performers going back for pretty much 5 years. It's performed in line with the S&P 500 when it goes between 30 and 70. And up here, it's staying in the top half, so 50 to 70, clearly outperforming for the last year and a half, and it looks like it wants to keep doing that. Centerpoint Energy, this one was a little different. The chart's a little bit choppy, but I would say that there's two big downtrends in momentum here, and this one started to turn up this week. But I like the fact that it came up, it's flagging here, and it looks like it wants to start to accelerate higher. So with that, the chart's a little choppier. I don't really like the trend on it, but might get a bigger opportunity to get a 10% lift back up to the prior highs. Qualcomm is having a big day today. This came up on my scans the other day, but you could just see this big uptrend here. We're right at resistance, so we'll see how it accommodates that. Again, all of these stocks look like they're trying to run, so it's hard to argue with them when they're going that way. Again, back over into the consumer staples area here. Here's Brown-Forman. Chart's been pretty strong to begin with, but it looks like it's ready to take its next leg higher. Nothing wrong with this. Everything is continuing to work. The Constellation Brands, just seeing if I can pick it up here. Yeah. One of the things I like about this one, it's kind of had a big 2-year pullback, but it looks like it's starting to make a higher low in momentum here, and we want to see this turn up right about now. Sitting right at its 40 weeks, so any sort of breakout here would be interesting. It's only paying 1.5% yield, but the chart looks at a pretty big decision point, right? If it doesn't hold this uptrend line, it's going to start to break down. Conversely, if it can break through the lowering peaks here, it has an opportunity to get going to the upside. Anyway, I just wanted to share that. I think when you go look at some of those names, there are some opportunities starting to show up. So here's Forestry, and the reason I want to cover this off is we had the housing numbers this morning, and they were huge. I think doing it a little bit random here, but going to CNBC just is one of the, U.S. housing starts soared by 16.9%, and I think they were expecting a slight decline. So these numbers were huge this morning, and it's that kind of change that makes a pretty big difference. So it was one of the reasons that I was more interested. So here's Canwell Building Supplies. This one's out of Canada, and you can just see this is the sort of thing we're starting to see. There was a base, started to break out, pull back, and now starting to head higher. Universal Forest Products listed in the U.S. This one's been just quietly pulling back after a big run already, right? It was up from 25 to 52, so it was a double. And after this big surge in 1 week, it's gently pulled back for 10 weeks, but it looks like it's getting ready to rocket again. Here is Domtar, and what we see on Domtar is the stock had pulled back hard from 67 to 41, rallied up, and then has gone sideways. But look at this week. It's starting to break back above its 10-week and 40-week and take out 3 months of highs here. So this is really starting to look nice and a good setup for us. Momentum is trying to get back above zero here. So not a bad entry, and you could just try and keep your stop in around the moving averages. This GLT ticker symbol, this one has been doing the same thing, big surge sideways for 10 weeks. Now it looks like it was trying to get back above the 10-week moving average. I want to see it break through this prior high at 1889. And then we've got Acadian Timber here, and this one is really sideways, hasn't done much this week. I kind of thought this one might surge a little bit and start to make new 52-week highs, but we didn't see that. International Paper, this one had broken out to new 52-week highs, pulled back a little bit, and is now trying to get back above the 10 weeks. So we want to see that surge pick right back up. Weyerhaeuser, big push on the back of this news data today. And again, the stock was doing really well to begin with, and now all of a sudden it's starting to push new 52-week highs. And it looks like green space is ahead, and we probably could start to look up into this 33 to 36, 35 level and see if it can break out. Nina paper, this one's been pulling back to the 40-week. Not my favorite chart. I'd like to see this PPO line hold and it start to turn up here. Resolute Forest Products, I like this one. Big, long, gentle pullback on momentum here, and we're starting to break through that trend line, so I like that. A breakthrough $6 here. The stock was as high as 14 last year, so with that move, this is a Canadian listing, but with that move, 6 to 14, that would be more than a double. Western Forest Products, this one, again, big downtrend in momentum here, trying to break. Maybe I should draw that in. And what I want to show on this is when these momentum trends break, like here's an example of one kind of breaking down and then it starts to turn up, and you don't even have to look up at the price pattern. What you just want to do is just see, is the momentum changing? And that's what I like on this one, is this big 2-year downtrend in momentum is starting to shift. I can keep my stop relatively close, but I could also look to some big upside here. It would be a double and wouldn't be at last year's high. Well, I guess it's not last year anymore. It's a year and a half ago. So starting to like some of the way these names are setting up in here. They look okay. And moving on to the next page. So West Fraser Timber, this one's pushing really nice. You can see the 40-week moving average has been resistance. It was support all the way up, resistance all the way down. Now it looks like a clear break away from that. Momentum moving above zero. That's a pretty nice place to enter. The stock is $60 and the prior high was $100. Norboard, this one, they make the particle board. This is new 52-week high territory for them today. And the stock had been basing and is starting to gently turn up. Yield is around 3.5%. Interfor Corp, same idea here. We've got some big downtrend price action. Looks more like a head and shoulders bottom to me, and the PPO just barely above zero, coming back, pulling down, and now starting to turn higher. Full stochastic bouncing at 50. That's a bull market trait that we like to see. So in bull markets, it keeps bouncing in around this level. In a bear market, it keeps rolling over and gets resistance at that level. So we want to start to see this turn back up again. Looking at CLW, Clearwater Paper. This one, again, same issue. Big downtrend. Let's call it 2 years. Trying to push here, and it wouldn't take much to get to new 6-month highs. PPO right at zero. It's not my favorite chart, but again, these big breakouts here, and this is $22.44. A double is kind of where it really started to break down in late or early 2018. Canfor Pulp Products, big downtrend here, and this can't be confused with the other company, Canfor Forest Products. Canfor Forest Products had a buyout by one of the major shareholders. That deal got rejected, so the chart's got some big swings in it. This is a different company, and what you see here is the big downtrend. Nice spike today from almost, let's call it $8.50 to $10. So big move up 15%. And we see the downtrend here in momentum. It's been trying to rise a little bit. Obviously, this will help turn it. Want to see it get through that 40-week moving average. That was a big trend change back here. So real simple stuff. But if you're starting to move above the moving averages, this 10-week has been resistance for a whole year, really, and now we're starting to surge above it. So this looks pretty nice entry. Wood is the ETF representing all of these companies, and what you see here is this ETF has been heading higher. It's trying to rest on the 10-week moving average, but if this can start to kick up at all here, you've got new 52-week highs that were just hit. So this would just be a reinvigoration of the move. Nice place on the chart. Conifex Timber, this one surged about 4 weeks ago and is now just flagging. It's hard to talk about a stock that was down as low as 20 cents, so I don't really want to cover it off, but it was up at $6. This is a pretty major trend change, obviously, and getting back in around that $1 level. If it could get back to the 2018 highs, that would be a 5-timer, so nice. Here's Canfor Corp. This is the one that went through the buyout, so made a double bottom. one of the big shareholders said that they were going to take it out, popped it up to $15. The board rejected the buyout offer and it pulled back, and now it's starting to climb back up again. So interesting chart shape, one of the better forestry companies out there, but if this was going to start to turn, there's lots of room to the upside. Resolute Forest Products, I mentioned the Canadian ticker earlier. Here's the US ticker. And what you see on this, again, a nice push off the base here. And we've broken that big downtrend in momentum, starting to improve. And when that starts to happen, that's the kind of thing that can really change the chart shape. So pretty excited about that one. I think there's some big opportunity there. Lumber, the point I want to make here on lumber is it's trying to break out to new 52-week highs here after the big swoon in 2018. And you see a continuous trend in momentum slightly higher. It's not an aggressive chart, but again, I think we'd be fine if we could just get a little bit more price action going on it where it can start to surge up a little bit. Lumber's quite volatile, so this is 250 at the bottom here, 650 at the top. So just in this range here, in 1 year we dropped at least in half, 50% for the commodity. If we did that in oil, that would obviously be quite a significant move. So not saying lumber's not significant, but it's nice to see that the housing stocks are starting to find some ballast, and these lumber stocks look like they're ready to start turning up. Just in case you didn't see the market buzz show about the financials, the one thing I want to cover off here, just showing people, I'm looking for, they're under banks. And the point I wanted to make is a lot of the banks were starting to roll over, but I didn't show the Royal Bank stock in the presentation earlier. So I want to make sure I cover that off because it's one of the nicer charts that's starting to show up, and it's Canada's largest bank, but it's listed in the US. So here's Royal Bank of Scotland, and you can see this one's rolling over. The Credit Agricole, where did I go with Royal Bank? Scions. Okay, I'm going to change this. Let me just scoot up to the top and just break out of here and go into summary mode and look for Royal. There we go. And so what we see on the chart here is the stock's been kind of range bound sideways for 2 years, but I like the fact that it made a new high, pulled back to kind of support, and now looks like it's ready to start heading out again. So let's just zoom in on the last 2 years. What you see is the stock starting to turn up. It'll pay a dividend for record holders, for people of record next week, and pays out roughly 1% per quarter. But holding at the 40-week nicely, big volume coming in this week to help with the surge. And Canadians have a small window for their RRSP contributions or their retirement savings contributions that has to be in by the end of the February. And it's not uncommon to see the Canadian banks rally into the end of February and then take a breather. Coming off the 19 lows, it was a little bit different. We shot up all the way through that period. In 2018, the market surged up to the high in January and then fell apart. So what I like here is we're getting set up after breaking above this, call it $80 level pullback, holding at the 40-week, and now looking like we want to surge. So you can set your top stop relatively tight. And as long as this continues higher, you're going to get a 1% yield next week. So things like that are setting up nicely. There is TD Bank. And this one, it's pushing up again. This is a 5-year chart. Let me just tighten it down to a couple of years so you can see the move here. But this is starting to do the same thing. And again, consolidating right near the highs. If it was to be like JP Morgan and could start to break out, that would really be a nice thrust. And they just paid their earnings last week. So be Royal Bank that you'll collect, that you could still get the dividend. BMO Financial also had a nice surge here. So new 52-week highs, and looks like it wants to break out on the back of this week. So that's a nice one, around a 1% yield, and it'll pay out probably for owners next week. So all of these banks are kind of getting set up on that time frame. CIBC, another Canadian bank. This one has been jogging sideways. Needs to get back through this 10-week moving average to really get excited about it. And the last one is a Canadian bank with a lot of Latin American influence. And this bank isn't doing as well. It's still below its 10-week. I like the Royal BMO TD Bank setups better than these other two, so I would just encourage you to look towards those. But in general, the big U.S. banks, JP Morgan reported this week, and I'm just trying to find the chart quickly. Too hard to do it this way. Sorry, I'll just go back to the summary here. And here's JP Morgan. And the one thing that I thought, I mean, they had a great earnings report, and yet the stock isn't doing anything. So the earnings were on Tuesday, I think, which was the 14th. And so what you see here is they surged up, made a new high, and then pulled back and are closing in the middle of the, call it 6-week range. So not quite the response I thought we'd see coming off the back of the earnings. I thought theirs were very good. But when I compare that with the other banks like Bank of America, this one's been rolling over for 3 or 4 weeks and didn't quite do it. And then when you look at Citigroup, nice surge to a new high. So that's really looking good. That chart looks probably better than all of them. And then Wells Fargo obviously had an ugly report, and so it sold off very, very hard. And there's a new boss in there, so he'll probably be trying to clear out everything in the financials, give himself a fresh start while the opportunity's there. So maybe that was part of this, but I think in general the banks are U.S. Bank is what I wanted. The banks are starting to roll over a little bit and don't look quite as healthy. This one's already starting to break a trend line. So with that backdrop, wider backdrop for the banks, I'm a little bit leery on the U.S. banks. Again, the Canadian ones look a little stronger. I did point out that the asset managers were doing really well, and one of them was Morgan Stanley. It obviously went ballistic here. So that was a very nice push up to new all-time highs here, 56.70, and we're trading at 57.29. So looks like it's going to go into the month end with into the week's end with a nice big push to all-time highs. So that kind of thing looks great, and the backdrop with the technology stocks still rocking looks pretty good. Even the railroads, which I have been following to try and see which way they wanted to go, and they hadn't really been giving me a sign, and then this week they broke out to new all-time highs, even though CSX didn't have a great earnings number. So a little bit surprised about that. This was a really nice bullish thing to see. And again, if we were to start to see more industrial manufacturing activity, then this chart would start to break out. We still have the backdrop of the Fed keeping policy very easy. So if we're going to start to see the rails breaking out, this makes me much more bullish over the medium term for industrial companies and stuff like that, if these charts are going to start to work. I think on the scan data that I showed you earlier, one of the leading stocks up at the top of the list was Old Dominion Freight, and this chart just pushed to new 52-week highs here, so that still continues to set up very bullishly. So starting to see transports take off, and it's not so much the airlines I don't really care about because they go sideways a lot, but seeing these freight companies start to take off and the rails start to take off, I think both of those indexes are pretty important. So with that, I'll wrap it up for the week. Again, looked like the market was going to pause. Now all of a sudden we're starting to see these new groups participate with housing, kicking it up. And the transport starting to key us into some other changes here. So all of that adds up to more pressure to the upside. Looks pretty good from here. And we might be ahead of our skis on the technology sector, but start to look to some of those dividend pairs. Thanks everybody for joining me. Have a great week. Bye-bye.